TGIF Warriors. We made it. How you doing, AJ, Mike? Ingmar, how's it going? Hi, Kman, TGIF, Steve, RJP Pie. Hi, Blake, Paul, Ran. Hi. Oh, you're hurt. Hi, Hugo, what's happening? Mike Bergman. Okay, TGIF indeed. All right. So, dollar bears, don't be greedy. Don't you agree, K-Man?
Good morning, Mr. Coach. Of course, we should not be getting too greedy. It's been a very rapid move that we've seen, and one of those moves, the get me out of everything move. Yeah, I agree. We went to tag the 114 three quarters, 115 the figure, and rapidly moved away from it. But we will see what the day brings. We do have the Michigan out. We still have a lot of uncertainty. I wouldn't rule out another test up there, to be honest. But
Yeah.
what is to me, and I've been talking about it on the Flow Show as well, it's when the euro dollar, which is the biggest FX pair in the world, trades like this, when you do
Yeah.
like 100 pips in a few minutes,
Yeah.
150 in less than an hour, it means that something is not
Instability.
right.
Yeah, instability. It's
Yeah,
massive.
it's not right. So to be perfectly, yeah, what I've been saying as well, if we get another one of these rounds on this Friday and perhaps the open on Monday, like we've seen a night in
Yeah.
Asia, as we've seen, um, I wouldn't rule out some of the central banks coming out at least to start chatting about the stuff and try to smoothen things a little bit, especially if I would say the bond market would see
I'm a
another
mind reader.
serious leg lower. That would see them have some headaches, I think.
Look, yeah, look, hopefully you get some type of, it's a higher low, you get some type of ABC. But
Mhm.
you know how 4,800 is important in the S&Ps?
Yeah.
85 is really, really important on the um, TLT, the
Mhm.
bonds.
Mhm.
Okay. To me, like I commented last week, that with that kind of risk off rally, that was I guess I used a limp dick rally. It's not your father's bond rally with risk off when they would lock limit bid
Mhm.
on a move like we had. So there are other issues with the bond market. There's so many issues
Mhm.
with the bond market. And we take out this 85, just a simple measured move would take you down to 70. So, it looks like we're going to have our guilt moment here in the
Yeah.
upcoming weeks.
We- yeah, exactly. And it's not your normal market as you've been saying as well. This is
No,
a move
es-
where the big
especially,
investors. This is
yeah,
not
this
retail.
this is like a third world country's tenure.
Well, exactly. That's what I said on the flow show. What Larry Summers actually said yesterday. The U.S. bond market is trading like an emerging market, and that is not normal because it should be one of your stable, more stable markets. Well, we know that after the pandemic, everything has accelerated, right? And there are those kind of moves that we saw, but there was so much money being thrown around. But this is worrying. I mean, if you see another one of those moves in the next few sessions, some of them may need to think because it's taking the allures of get me out of everything US, and that is not healthy for any financial system.
Well, you know what? That talk of and the European markets did way outperform until this correction that we've had. But I think the DAX actually took a bigger hit. I don't know, or at least equal Uh, I saw the DAX chart the other day. I'm looking for it, but here it is. Okay, it's pretty ugly. Okay, I mean, you had 20% from here, just like the S&Ps. So I mean, there's this market doesn't look any better than the S&Ps.
No, 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 no.
Almost looks worse to me. So I don't know if that's a story that people are repatriating and putting it into their own bourses. Uh, you know, I was thinking about the S&Ps and thinking about the bonds and the dollar, and I know a lot of you guys weren't around in '87. But in '87, we had the same situation. We had a falling dollar, bond market in trouble, and back then it was the Deutschmark. Okay, it wasn't the euro, and I forgot who the German central banker was, but um, they were asked not to raise rates, and they did, and that's how you got the crash. But you had this disintermediation. So if stocks can still go up despite this bond market here, and we get that close over 5,500, and we're going into new highs to just follow through with the 87 analog, we would rally into August, okay, while the bonds are, you know, still in a downtrend or moving sideways, but not going with the market. And that's called disintermediation. And you finally get to a point where the rubber band is so stretched, um, you have a financial accident. So we'll see. Right now, I'm thinking this is a possibility. It looks a lot like 1987 to me, especially if we're going to get a melt up in the face of a weak dollar, a bearish trend in the dollar, and a bearish trend in bonds, and one more blow off. There'd be so much tension between the two. So I'm thinking that's a possibility. But of course, you need 5,500 first. But anyway, just thought I'd lay out that analog to you guys. I was talking about it with Jim. I said, it reminds me of '87. So,
Yeah,
And
yeah.
and
and
good morning,
I
Dale,
had
and good morning,
Good morning.
Kman. I was just going to say we haven't. I was in high school in 1987. So
Yeah, yeah.
I was trading.
You were trading. I
Oh
I had
yeah.
a I had an IB, and it was in Phoenix, across from Central Park Mall,
oh,
Blake.
so we were in the same town at that time.
Yeah, yeah.
Oh,
So I had an office, where the Playboy Club used to be on Central.
only you
Well,
would
you
know
don't
where the
remember. You were
Playboy
in
Club
you were in
was.
you were in high school. Anyway,
You
my
just
off.
let the cat out of the bag, Dale.
Well, it was at the top of the building anyway. So when I'd walk in there, the bartender would give me a
Know
hard
your name?
time. He no, it was a guy. He played the song. I think it was Marvin Gaye. If I only would have, then I could have, then I should have. So anyway, I don't know why I was even talking about Phoenix, but oh yeah, the
Back in
crash.
'87. Back in
Yeah,
'87. Sorry,
I
didn't mean to
went down
interrupt.
to the bank to see if the banks
Hmm.
were still open, and they were like oblivious to the crash that day. Anyway,
I was
yeah,
actually trading dollar mark that day. I
yeah.
was market making dollar mark in those times.
Remember
Man.
trade that instead of it being like euro pound and stuff for direction of whether
Yeah,
you should be like, you would trade
sterling mark.
uh Swiss mark or
Yeah, Swiss Deutsche Mark, sterling Deutsche
yeah,
Mark. But
yeah, yeah.
okay, that
Yeah,
shows our
anyway,
age now. For
it's a
real.
long time ago. Currencies do come and go, don't they? All right,
Anyway,
so
I
anyway, um
yeah,
so
I had flashes of the Asian crisis as well back in
oh
19 what is it,
97.
98.
Yeah, I think
Yeah,
97.
because people
Thailand.
compare it to global financial crisis and stuff, but I think it's wrong. I mean, this is a different play.
Where we are now.
I think so. I
Yeah.
mean, this has more
Well,
allures of the day before, October 1998.
yeah.
the day before, we had a 3-4 big figure drop in the dollar yen, and then the whole thing 7 and 8 of October 1998, the whole thing imploded, and dollar yen
Again
lost
in October, huh?
dollar yen lost
October.
20 big figures in 2 sessions, right?
Wow, I
But
don't
I
remember.
mean that's we're not there yet. But I mean, if you look at the euro dollar, 6 big figures in a week is a lot, you know.
Yeah. So I
And
mean,
that is not what you call a very healthy market in the most liquid currency pair on earth.
yeah, and well, this was 4, wasn't it? Or 6? Yeah, 6 this week. You're talking about from this week's lows
Hmm.
to where we got. Yeah,
Yeah.
it's huge. Um, okay. Yen. I'm getting a little divergence here, and with the way the correlation between this and rates broke down
Yeah.
pretty good. So I guess it would have to recapture 44 to have a chance to squeeze. It is diverging, okay, but I don't initiate a lot of new stuff on Friday unless there's an NFP or some type. Well, we have a number today. Maybe I will.
Yeah, we have PPI
But
today, but I think the more important may be because that's an April number that is going to come out, or an April set of data that's going to come out is the Michigan a bit later.
okay, and Aussie bringing up the rear still, but it looks like it might be contained.
Hmm.
And, so let's just eyeball it. Let's call it 59, call it 350. So maybe we get a pullback to 61. That's why I'm saying that that's why I'm saying there'll be a chance, I believe, unless we just break out here, to buy all of these on a pullback. Um,
It's
that's what I
underperforming the
think.
Kiwi, and that is still interesting. The Aussie, and
Well, that's not, yeah,
where
that's
Kiwi is
not
back up
bullish.
to, yeah, the Aussie Kiwi is lower, right? So where Kiwi is relatively back up to interesting levels, Aussie is still miles away from that big 64 zone. So
You know what? This looks like a trade to the upside. Look at this. It's
could
glaring.
be.
They took out the stops.
Mm.
So everyone who had their stop under this low, probably 1/10 of a pip beneath this low. That's what people do instead of giving it tolerance. So they're gone down here, and now the market's up here, and they won't recommit. So,
Yeah, they
looks
will
all
buy
right.
You,
again if it breaks above 109.
you,
Yeah.
you know, you know, you just said something really interesting, Dale, and I want to talk. I want to spend some time talking about a little bit longer term stuff about recommitting, and that I've been doing a lot of soul searching the last couple of days, and man, I've got a lot to say today. So,
Okay. Why don't you take it away, Blake? Because we do have a guest today. So,
oh, we do.
um,
Okay.
yeah. So I'm going to stop sharing. And yeah, it seems like sometimes when markets get like this, and we haven't seen them like this for a long time, we do get reflective about where we're at in history, where we're at in our trading careers. So I'm all ears.
Absolutely. You were just talking about recommitting, and there's something I posted a couple stuff on social media, so it's like you guys kind of will get a feel what I'm going to talk about. But a lot of this has to do with like just your conventional wisdom. And if you go back and you think about like when stocks started to, well, actually you can go back like to 2022-ish, when bonds really just started to roll over, right? And people have been really, portfolio managers, asset managers, they've really had a difficult time over the last several years when you've seen, the bond market just roll over so aggressively, since
Yeah.
COVID. And you see it continue to sell off. And remember in 2022 when stocks were selling off and the bond market selling off, and people are like, holy shit, the whole 60
Yeah.
40
It didn't work.
portfolio mix just doesn't work anymore. You know that, right, Dale?
Yeah. Yeah.
Right. So now you have this, and the guy that comes to my mind, and I can't for the life of me, the last 24 hours, think of his name, but you would know him, the milkshake theory dude, Brent,
Yeah.
whatever. Yeah, right.
Johnson. Brent
John,
Johnson.
that's it, Brent Johnson. And I'm not, look, I don't know how he's positioned. I have no idea. I just sometimes see random comments from him, but he's
No.
defending like the dollar and, retweeting stuff about this is a liquidity issue and the dollar is going to come back into play. And I'm just like thinking to myself, what we've thought, and obviously he's wrong, obviously, he's been wrong the last few months as stocks have come down 20% and the dollar's dropped
Yeah.
precipitously,
Yeah.
right? So his theory isn't working. But I'm not, like I said, I have no idea how he's positioned or anything like that, but it just makes me think how conventional wisdom really isn't working, and it's all been kind of thrown into the waste bin, and this is now just really a thinking man's game, and we have to be on our toes. And I feel for asset managers, I feel for portfolio managers, and that goes back to like what I posted something last night on Twitter. um this tweet last night about this, because shit was moving so fast. I forget where the post is. It's right. Oh man, wherever it is last
Don't
night.
these
Oh,
Blake, don't you
the,
think these pension managers that run these big state pensions and even, big hedge funds
yeah,
that, with their MBAs and everything, they didn't learn the lesson, the higher the yield, the higher the risk, and piled into junk bonds to get a higher yield. And I guess they're going to find out why they call them junk bonds.
junk, right? And that's the
So,
that's the thing about the market when everybody is in one direction, right? And that's that was the point of this post last night. I mean it's gotten 6,000 views, and so many people are quoting it, retweeting it, and all that other crap. But the fact of the matter is, we are seeing a complete confidence loss in the
yeah,
US. I mean, and
fast.
the point is, yeah, if you like, let's say you're a, I mean, Kman, you've dealt with how many guys on the bank desk when they call you up and they're managing, you know, hundreds of billions of dollars, tens of billions of dollars, and they're in Mag 7. They've got a 57% allocation into the dollar. They own a mix of a lot of treasuries, and you're seeing your entire portfolio decimated with one man. And love him or loathe him, Trump has given us a lot of volatility as a trader. I love him for that reason. But if you're a portfolio manager, how do you deal with that? You can't price risk. It's impossible. So your only solution is to get the hell out of and diversify out of US assets. That is your only answer. There is no other answer. Because when you deal with this week, since tariff day or liberation day or whatever it is, like, how do you deal with it? Like, you saw your portfolio swing, your tens of billions of dollars make and lose 10, 15, 22% up and down. You can't deal with it. So the only logical solution is get out. I need to reduce my dollar exposure. I need to reduce my equity market exposure. I need to reduce my treasury holdings exposure, especially if China wants to retaliate or Japan wants to retaliate and they hold all of these US, treasuries. I need to get out of some stuff. So that is what we're facing right now. And I think it's a really big issue. And it's something I've been talking about for 20 years. Just like I've told people, like, hey, man, if you ever see this happen, what we're seeing right now, you got to like really get out of stuff, because that is a complete and utter loss of confidence in US. Anyway,
Yeah.
that's kind of like I wanted to rant about it a little bit because I think it's bigger than people realize. And the stock market seems like it is right now the last to know. And that's why I think we're inching closer to that. You just mentioned it, Dale, like, just Liz Truss moment or whatever you want to call
Yeah.
it. It's scary. It's scary to me. It's really
Well,
scary. And
you know
yeah,
what? Read the fourth turning this weekend
yeah,
because
and
I think
that's
we're
another
in it.
thing.
I think we're in
Yeah.
it, Blake.
I agree that one dude that's on Real Vision all the time, the redheaded dude, can't think of his name. I can't think of anybody's names right now. But yes, we might be, and it's scary. It's scary stuff, guys. I really worry about like what we're in store for in the next couple of weeks if things don't get padded over somehow. But Dale, I know Dale, you just made some comments. Kman, what do you think about everything I just said? I mean,
Well, I
do you have
mean
any?
that's what I've been mentioning about before as well. I mean, see, it looked, and when we were talking about the market as well, it looked just looking at the euro dollar, it looked somewhere between 109, 111. It was looking, but it kept on bouncing, and I said it may be very erratic, but I think we are going to go, and that's when. I think the market people have been moving out. They have been partially moving out of equities, probably bonds as well. Those who have been early to get back into cash are probably having a sigh of relief right now that they did. But yeah, we may not even be at the end because moves like that in the euro dollar, for instance, or in the bond market, um, they are harming portfolios for sure. And the
Yeah,
thing which was really typical, because you were talking about when you were sitting on desk and stuff, is when we know that a lot of investments now are done via algorithms, right?
yeah,
they've all been making models of what they should do, and whether it be in the active or the passive investment. But when I was at desks, it was I had a sales guy who, well, several salespeople who was sitting on the asset management desk and on the hedge fund desk, and they always would get up just to give me a sign when it was the main portfolio manager that was actually ringing up, because then you know that something is really really wrong. And I guess there's a lot of portfolio managers now that rang the bank straight away, or intervene straight away in the market, because, yeah, this is we talk
you know,
about
let's
crisis
not forget
protein,
it. It wasn't that long ago when the euro was coming down,
Mm,
and we had planned to be long-term buyers at 102.
hmm.
I mean, that was the call of the year,
Yep.
really.
hey,
That's all you had to do.
But I
Load
think
up on euros down there.
yeah,
What?
yeah,
as I said it already a couple of times, it happened actually faster than what I thought.
Yeah.
Um, because I think Trump and his administration gambled much higher, much harder on those tariffs and everything. So it happened earlier than what I thought. But that's exactly what I said at the beginning of the year.
this
When we were making our 2025
Yeah.
prognosis, it was like it's not going to last. The dollar is
Yeah.
not going to last, and
right
yeah,
here.
quite happy
Yeah.
to have called gold as well. So.
Yeah. Gold was the trade of the year.
Mhm.
This is from the
More
week
than
ahead
euro.
video in January.
Yeah.
K-Man, you were out of town. You were in Tokyo, and you missed the story. And I can't believe I haven't even told you this since you've been back. My son's girlfriend, her father was the head Morgan Stanley FX trader at Morgan for 25 years up until about 12 years ago.
Well,
So he was during your time frame, and I
yeah.
actually had I had coffee with him the other day, and
Oh.
he knows a lot of the same people I know at the Gelber Group in New York. We know a lot of the same circle, which is really interesting. But he said the exact same thing. He's like, man, we had, FX is Forex is always like kind of the redheaded stepchild of the markets. It's like, they'd make all this money, but you get paid out on bonuses based on what your equity market, desks have done, and fixed income. And FX was kind of like just the bottom of the, not I'd say bottom of the barrel, but more
No,
of the
the end
like,
of the funnel.
yes, yeah, you can put it that way. And but he's like, we would get cued in. Like I knew when shit was brewing because you could see everybody moving. And that's the beauty of the FX market, is we see things happen before everybody else does. And that's why, like, I'm sitting here sounding a little I don't want to just, sound like I'm talking crazy talk to you guys right now, but this is stuff that when we see these types of moves developing in the FX market and you have exposure in other markets, you need to be thinking about the whys. And like I said, this is a thinking person's game now. It's not passive investing is dead and it's going to be dead for a while. And this is where really experience matters so much. And that's why being here on the F.A.C.E show with Dale, with Kman, with Ryan, he was trading on the live floor in his early 20s, and we're the same age, and before I even started trading, and when I was 26. So, having that type of experience, this is the place you want to be because it's going to give you a heads up on, how other markets are handling stuff. Now, I'm sorry, we got on this tangent.
We have a total of 1,300 years experience with our team.
And counting, Dale.
And counting, right? So, hey, I'm just going to tell you guys right now, I would not be short the euro, and any strong producer prices that pushes the euro anywhere close to 113, I'm buying it today. We are in breakout territory. I'm hoping, but we were hoping for strong CPI yesterday. We got a weak number, and that kind of assisted in keeping the dollar weak. The euro's in breakout territory. Let's just face the fact that we are breaking the trend line from basically 160 to today, from the all-time highs in the euro to where we're at today. We're breaking above it, and it's a massive breakout, and I don't think you want to fade it. You got to think about how people are.
The administration wanted a weaker dollar so that they could help, exporters.
Oh, yeah.
And they got it.
They're getting it.
Now it doesn't matter because of tariffs.
Well, now, yeah,
What
and
we
they're
said
getting it
then,
for the wrong reasons. That's
yeah,
probably
exactly.
the thing, right? So anyway,
That's all what we wish
Anyway,
for.
it's weird. I don't get it.
that's my focus for today. I know we got data coming out in a few minutes. Dale, where's your focus today?
My focus is on calling it a week.
Okay, all right. Kman.
True.
I took profit on my gold long, and I'm already thinking that I should be back in it. But I'll wait for the data. And rather the Michigan than the PPIs. But
Look at
yeah,
that throw over.
this thing is big like hell still.
Hey guys, just a couple other things. I'm going to get us ready for data. You see these blinking lights right here, right? Like euro dollar BT. You see how it's blinking kind of fast, and see how Elliott wave it's blinking a little slow. That's basically a new timing feature that's coming to ForexAnalytix, I think, over the weekend. That means analysis was uploaded within the last hour, so you can just go over here and go, oh, well, this was just updated 20 minutes ago, and here's the chart. And, we're talking about how the euro's, holding the 618 retracement. ForexAnalytix, the sale is officially on. We call it the liberation offer because we've never done this. We are offering 40% discount on month to month. We've never done that before. And you can lock in those prices now. So it went live today. I told you all week it's going to be happening. It's now here. Lock it in, because once you lock it in, you grandfather. So you grandfather in. We have people that have been grandfathered in for 8 years now. So we've never done this. And it's just our way of trying to help, because this is what we're seeing is unprecedented right now, and we understand that. So I'm going to open the data flash right at this moment in time. Let me move this over and get us ready for the data. We have producer prices coming out in less than a minute. Kman, do you have any flavor on how you feel about the inflation data coming out here in just a
No,
sec?
just that as we've seen yesterday with CPI, even if it's already a data point from before the tariffs, I think any weakness is probably going to continue to weigh on the dollar right now. 112.2070, that's to me the zone that people will be looking at right now to the downside if we would get some upward surprise. But I don't see it really breaking below there.
Okay, we have S&P on the left, dollar index in the middle, and then the obviously well, actually I should put yields on here. Let me put yields on here really quick. Shoot. I know the data is going to come out. You might as well scream it when it comes out. Here we go. There's yields. It's 10-year yields right there. Actual
Bit weaker.
weak.
Bit weaker. Core about 3 tenths lower than expected year on year. Just a tenth, 2 tenths now of the prior month. Yeah, that's a bit weaker.
It
But
is a bit
it's
weaker.
PPI, right? I mean, we need to let to give some leeway to those data more than CPI data, perhaps.
Okay, so that might give the now you can see the bond market's actually kind of firming up a little bit. If the bond market doesn't firm up after this data for some reason and it really starts to weaken and yields go up, but the dollar goes down, that's when we have a problem. So just keep that you know, on your radar as we go into today. What a week, guys. It's been absolutely crazy. And you know, if you've been in the chat room, you can see I'm scalping around, you know, pairs all over the place. I um between myself and Kman, we're filling up the traders room, but there's so many great traders in here. And then you got your general chat room where we're just talking about concepts and ideas and having discussions. And if you want to, you know, be in here talking to us about, you know, how we're accessing and what we're trading. You know, again, we just offered the best offer we've ever offered ever. So take advantage of it and jump in Forex Analytics. Have a great weekend, guys. I'm going to film the week ahead video in a couple hours and then I'm going to drink a beer. And Dale, thank you for your guidance all week. Kman, you've been great on the flow show. I even got to listen to the full flow show today, almost the full flow show today. Ryan's going to be back on Monday. So we'll have a full house tackling volatility as it comes. You guys are amazing. And everybody listening in here, thank you for your continuous support of what we do.
Great job this week, Blake. Nice work, Kman.
Thank you, Coach. You too, man.
Okay, really.
Yeah, thanks, Coach.
You know, a lot of people don't have accounts this Friday. So let's have a moment of silence for him before I bring Andrew O'Connell in here. But I think, you know, I hate to be ruthless, but they'd still be in good shape if they were here. Okay, thank you for your moment of silence. I can't shut up. So I'm going to bring in.
Hey, Dale, pull your microphone down a little bit. And
all right.
Yeah, there you go. Perfect.
Better.
All right.
So I'm
Yep.
going to bring in Andrew O'Connell, who is a trading champion. He won that U.S. Trading Championship last year. Andrew, how are you adjusting to gravity?
Hello, my friend.
Hey,
Oh my
buddy.
gosh, this is crazy.
Huh?
Yeah, so
What?
this is totally different environment. I'm competing again in the US Investing Championship.
Yeah.
So yeah, trying to put together another good year in a crazy market.
Yeah. So are you trading both sides of the market now? Are you trading the short side or
No, so
still long only?
for the most part I've been trading the long side. I
Yeah.
was able to sidestep a good amount of the action in February, then got tangled up on that Trump, tariff announcement.
Yeah.
And yeah, kind of scratching things together, but still doing pretty good for this year so far. So managing.
Yeah. So it's not like I was saying before this happened that if, you know, people have just been able to own the spider and go play golf for 3 years, that's over.
Definitely.
Yeah, so you have to be a little bit more tactical. You know, it's hard to be long term now, isn't it?
Yeah, I found in this market environment, I found you either have to pick one of two things. You either have to really shorten up your time frame and go to more of like a day trading, scalping mindset, or you have to go long term, which is I've been doing the latter, going
Yeah.
more long term with my thinking, and that's
Mhm.
been helping me a lot. But I find like with this swing trading, if you're on like a 1 week, 2 week time frame, that stuff is nearly impossible in this environment.
Okay. Um, has a dollar influenced you on trades? You know, do you believe that a weak dollar meaning risk on is dead, because we've had dollar weakness and market weakness and bond weakness all simultaneously. I don't know how old you are, but that's what was going on in 87. So if we could put a blow off together and the S&Ps close back above 55, it looks like new highs for me into the summer.
Yeah, so with the dollar, I don't think the dollar cratering like this is necessarily a bad thing
Okay,
because
yeah,
there's a lot of policymakers that have wanted the dollar to go down
right.
for quite a while,
The
saying that the
current
dollar's too strong.
administration.
Exactly.
Can you explain to me? They got their objective. They've gotten lower energy, and they've gotten a lower dollar. So, but the lower dollar to help exporters was the main reason. And then the tariffs negate that edge.
Yeah. So this administration, if I can just sort of back up to where I'm seeing this macro picture,
Yeah,
coming into
please.
this administration, I was supportive of their mandate and what they were going to accomplish. And honestly, I was pretty excited about the prospects of what could happen. So I'm in no way, shape, or form some like anti-Trump politicized person, but really it's astonishing. They've completely bungled their entire mandate in the first 100 days. And it's pretty sad, but when he came out with that board of tariffs, Wall Street was
Yeah,
really expecting maybe 10 or 20% tariffs and 20
reciprocal.
reciprocal, and 20% was like the bear case.
Right.
And coming into that, I really thought, hey, the market's already sold off quite a bit. Everyone's pretty hedged into this event. He's probably going to come in at 10%, and maybe you love the tariffs and you think it's brilliant. Maybe you don't like the tariffs, but even so, we can still get by. But when they came out with that board with, the fake numbers based off of a fake equation, based off of analysis by Peter Navarro and his fake economist, that's just an anagram of his own name, they lost all the credibility of Wall Street, all the credibility of all these wealthy donors that put Trump in power to try to make more money. And these policies, like internationally, no one liked them, and domestically, it's almost unanimous that no one liked them, other than like the super mega hard supporters. So yeah, this policy, it just made no sense, and
Okay.
they dug their heels in and got to this point where they drove everything to the brink, and then the bond market broke them just a few days ago on the first day that they were going to implement these policies. So in
This
my
bond
view,
market, you've been around for a while, Andrew, and maybe you remember your dad's bond market. That if we
Mhm.
had had a 40% sell off in the Qs and 20 in the spot in SPX, we would have done more than 3, 4 points. We would have done it in a day,
Yes,
let alone a week. This was one of the weakest flight to safety, flight to quality rallies I've
very
seen in my
weak.
lifetime. And
Yeah,
now
it
look at
was.
where we're at. Under 85, we talked about it on the show, and it's a major breakdown for the bonds. They could head to new lows.
Absolutely. And I think it's because there's so many competing objectives. Like, one of the big objectives is we have this big fiscal cliff coming and a maturity wall of treasuries.
Yeah,
And part of the goal of the administration was, hey, we're going to do Doge, we're going to cut 1 trillion in spending.
yeah.
And that's really going to help us with refining our national debt and keeping our interest expense low. And yeah, with this stunt they've pulled, like as of yesterday, Doge is only going to cut 150 billion, not 1 trillion.
Yeah,
And then
that's a
now with
little
this
less.
trade war and with bond yields blowing out, like the trade war, if it goes through, like these China tariffs, anyone can see, hey, there might be a bit of an inflation spike as people have to pay way more to produce stuff. So it's like, what are bond yields going to do against that backdrop? And if everyone's expecting 1 trillion in savings from Doge and then they come out and it's only 150 billion, what are bonds going to do against that backdrop? And
Okay,
when,
let's talk about this
yeah,
backdrop because they talk about the wall of worry. And
yeah,
everything we talked about says there's lots of reasons to sell stock.
yeah,
There's nothing bullish about what we were just talking about.
yeah,
So that's why I think people would be skeptical if we get, I still need 5,500, but that 48, 4,900 level was something I looked for. I still think there's a possibility that we climb this wall of worry and have a melt up, which is, I don't think many people are looking for that anymore. Do you know what could possibly, you have a good mind, Andrew. What could possibly be the catalyst for one more hurrah wave to the upside towards 7,000 S&P?
Oh yeah, that's my base case and what I'm positioned for in the competition is we are
Okay,
going to start climbing this wall of worry. So everything I just covered is incredibly negative, but here is why I think we will climb the wall
cool.
because all of those bad things I just mentioned, the policy made no sense, blah blah blah, all this stuff that everyone now knows and now everyone is talking about.
It's in the
But the
market.
reality is the market already broke Trump. That happened a few days ago.
Yeah,
Now Trump is in a position that's totally different than where he was even just a month ago. Now he's in a position where he's upset all of our allies, upset all the billionaires, upset many of his supporters, and that's really going to hurt in the midterms. And this is all over policy that no one agreed with. So how does he win from this? There's no way he wins. So at this point, he's already capitulated. Everyone in the world knows he capitulated. And equities put in a panic low, and even bond yields. Bond yields are not acting better now. But
yeah,
if
they're
you look
not.
at, say, like the 30-year treasury, we put in a panic low 2 days ago, and we haven't revisited that level, even though the bonds are not making a
Well,
miraculous
here's
recovery.
TLT. So far holding. Same thing,
Exactly.
20-year bond. So the
So
same
my
low as the S&Ps. Then
yes,
that's why I'm saying it better hold this low. Maybe we
yes,
get something like A, B, C. Maybe it is a bottom, but it better not. Just like 4,800 in the S&Ps, under 4,800, I get 35. Is analogous to the TLT taking out 85 that gives you 70.
I'm
So
seeing it the
those,
same way. Those are the two
yeah,
levels that everyone needs to watch. I think those are the two most important levels in the market right now.
okay, all right.
And so I
Go ahead.
believe what's going to happen is even if you look back at the COVID crash, the market never bottoms when the whole virus is gone and everything is back to normal and everything looks rosy and picture perfect.
Good
The
point.
market always bottoms when you pass the moment of peak uncertainty. And in my view, the moment of peak uncertainty was right before Trump caved and everyone thought the world could slip into the abyss. My view is we've moved past peak uncertainty. Now Trump is going to be in damage control mode. And what his administration has to do now is they have to start getting some trade deals on the books. Even if they're not wins, they just have to spin them as wins because they have to get things back on track. And I think against that backdrop where the smart money knows that Trump's whole mandate is just completely over and he's got to do this new thing of really just backing out of this trade war gracefully, people aren't going to keep selling on that. That's why I think with the VIX at 40, people aren't going to make money by hedging their portfolios now. That's my
Yeah.
view. I
Well,
think now we could start climbing that wall of
that
worry.
boat has passed for a while.
Yeah.
Okay. All right. So all reversal weeks here. You know where you're wrong, and people said, "Well, Dale, how do you, this was really just a day. Okay, it was the day, right? It was the terror delay day. So the whole week's range was made that day. So, people say, well, how do you get on board? And my advice to people was to, you know, do your fib work and look to buy a pullback. And we had pretty good pullback after that day. It may have been 61% of this or halfway back. So that's what
Yeah.
you do. You're wrong under here. You add on over 5,500, and I think that it could be very fast. We could have 3, 4 months of just people at first being caught flat-footed or short or afraid, and we will have some euphoria at the highs. Um, can you think of what would be give the market a sense of euphoria? Would be um, maybe President Trump and G come to terms because he wants TikTok?
Yeah, I think if something like that happens, which will eventually happen, I'm not of the view that we're going to rip back to new highs in the market.
Okay,
I think the risk reward from here is good. And I think with the
okay,
VIX at a 40,
yeah,
I'd probably be a seller. Like if the VIX gets to like 20, somewhere around there,
okay, good
that's
guideline.
where I wouldn't be overweight anymore because yeah, there still is uncertainty. You know, there still is the potential inflation spike. We've got the maturity wall coming. I think there's a lot going on. But what's going to happen is over the next 90 days, think about it. This morning, we got some China retaliation on the trade war, and equities are not going down.
Yeah,
That is the huge tell that this is all priced in at this point. If you're getting bad news and the market's not going down, that's the market sending a message. But with that said, what I think is important to look for is if we start to get like, okay, the panic whoosh lower is over, and now we're in a new phase of really just dealing with reality, we should start to see when earnings season starts, some companies decoupling from the indices. And what I mean by that is right now, every stock is moving in tandem. So you've got, all correlations have gone to one. Everything's bouncing together or selling off together. But when earnings season comes, there's companies that are not even impacted by tariffs. So when those companies report earnings, they're going to say, "Hey guys, tariffs stink, but look, we're Netflix. We have an asset-light business. We don't sell physical goods. Tariffs are not really a thing for us." There's going to be companies like my big position right now is Uber. Uber's ride
okay.
sharing. Uber's not in the business of physical goods. They're not going to be
So,
as impacted by tariffs.
okay, that brings me to a theme that uh, go with what's happening, and you're going to want to buy domestic stocks like small caps, the Russell against a spider. Maybe the Russell finally starts to perform better because there are more companies, although a lot of them are banks, but concentrate on U.S. companies that don't need anything from China, like everyone else.
Yeah, like that Russell 2000 has gotten decimated because the whole idea is like these companies are more levered, lower quality, et cetera, et cetera. And I believe it's like 30% off the highs. But there's definitely small cap companies that are not international and have no exposure to tariffs. Maybe it's a software business, asset light, not
Yeah.
impacted. And those kinds of companies, I think during earnings season, when they report and people get out of this malaise of just the shock and awe of what's happened, maybe those companies do good. And then I also think the companies that, hey, you find out, this company's really impacted by tariffs and could get really hurt. I would expect there could be some shock in those too, and those really decline.
Okay. All right. So, what are you doing right now, Andrew, with, your celebrity that, you've been doing this for a while, these trading championships, and I'm sure people want to learn how they could do what you do. You have any kind of business model that you're working with?
Yeah, I have a Substack that I write every single night, which is essentially just me doing my own research and publishing it.
Right.
And that's the main way to kind of see my work, see what I'm up to, that sort of stuff.
Okay. And best place for people to, get a hold of you is on Twitter at Pristine Capital.
Yeah, Twitter at Real Pristine Cap,
Real.
and then
Right.
pristinecapital.substack.com.
Okay. And what was your biggest position going into this quarter right now? Uber.
Uber.
Okay.
Yeah,
Let me
Uber's my
pull it
big
up and
position.
let me just pull it up and take a look at what you're seeing. And is this long-term? Because you said you're approaching it long-term. So how did it handle the sell-off? There it is. Yeah, that's rebounded pretty good.
Yeah.
That's a
So I think
4 hour.
this is the next theme to look for. Which companies are not as impacted by tariffs? And do investment managers start to nibble at these companies and buy? What we don't
Yeah,
really want is like this continued everything has a correlation of one and it's all moving together. With Uber, I'm starting to see that decoupling where Uber doesn't look like a chart that's crashed. Uber really looks
no,
like a range bound stock throughout
yeah,
this whole madness.
yeah. It
So yeah,
held the
Uber,
it held
this is
it
my
didn't
big
make new
trade.
lows. Okay, it looks good. Let's take a look at a weekly. Where did you get on board?
Yeah, so I got on board really in this chop zone that we're in right now. I have a bunch of executions in this chop zone, and I got one execution on that panic low. So on this trade, I'm about break even, nothing too crazy, but I'm betting that in the weeks to come, if we end up getting this big equity bounce, it should do
We
well.
get
I
new
see someone in the
highs.
chat said, "Are you worried Uber getting competition from Vimo and Tesla?" What I like is that Uber, I think, is in a very unique spot. They actually have a partnership with Waymo. So whoever wins in autonomous vehicles, Uber can just partner with them. And that's what they've been doing. So yeah, I think Uber, their mobility business is doing really well and it keeps growing. They're not really impacted by tariffs. They can win in autonomous vehicles. And then if you think about it, if because of the tariffs it becomes more expensive to manufacture cars and that leads to car prices going up, then ride sharing becomes more attractive. So I just think Uber, that's the reason why that's my big trade. I just think there's a lot of ways to win on this stock. So that's how I'm positioned.
Okay, I think it has 90 in it for a third drive. That's my
Yeah, so we'll see what
quick
happens with the earnings
analysis there.
season.
See what happens up there. But you have one. It's just a formation I teach people for years. This is a confirmed high. This high did not confirm, it diverged. And this high, unless we blow through 90 and get an overthrow, would be a 3 drive formation to a top. So I'd at least book partials up here.
Yeah.
But what do I know? I've only been doing it 150 years. So Andrew, great talking to you, and I knew I'd get some perspective. So we have, if you ever wanted to have a wall of worry to climb, it's the steepest one I've seen in decades.
Absolutely. And we've got clear levels to trade against on the downside. We have those capitulation lows that can be
Yeah,
great for stops in case things change.
yeah, yeah, yeah. Expect anything and everything,
Yeah.
especially now. All right, my trading warrior brother Andrew O'Connell, everybody. Find him on X at Real Pristine Cap and read his stuff because you'll be reading material from someone who's won trading championships. It's not easy. A lot of people compete. Okay, so good luck this year, buddy.
Thank you
Rooting
so
for
much.
you. Maybe you could do what the Chiefs couldn't do and get a three-peat.
That's the goal.
Okay. All right. Glad to be watching you. You've got
Thank
an
you so much.
audience. All right, Andrew O'Connell, everyone.
Take
And
care.
take care, Andrew. And that's a wrap, everyone. Hope you had a good week. And remember, don't just count your pips, count your blessings. And you could join the team in 20 minutes for the morning edge and take advantage of that offer. And when Blake says it's never been that cheap, that's it. So they had a good month this week in the room. Thank you, Donna. So, adios, everyone. Have a great weekend. Don't just count your pips, count your blessings. See you guys.